So what I needed to do personally is start to, and this helped me with the if-then, start to think of my trading in terms of probabilities. The probability of where this market is going to go, if these things happen, is this. So my risk reward on this trade at 17.25, was probably a couple ticks, maybe 3 ticks, for a potential of 10 points, 11 points on the trade. That's a pretty good risk reward ratio for me. So anything could happen in the market. And I'm just telling you, that's one of the things that I found that just literally froze me in my trading. Is the most current context the last swing? That's a great question. Is the most current context the last swing? The most current context is this, right? And in that, yes, you want to consider, and that's why another reason I drew another volume profile, you want to consider what is the market doing in this context of the swing high, the swing low. From the breakout to the high, back down to the low, what are we looking at here? And here is our low volume area from there, right at 2050. What do we get? We got weakness. We had strength back down into this area. Now what this does for me is I would be out of the trade. Remember, let the print tell you when to get out of the trade or when to scale. This is an area I was looking for potential buyers to fail, sellers to step into based on this low volume area. When I got this strength at the bid, weakness at the offer, that tells me I better scale out of this trade. Let's say I got into that trade down here. Actually, I was looking at 1750, and the reality is with this print, I never would have gotten into the trade. I might have gotten in after it came back down and went weak, strong at 1825. Let's say I got to fill at 1850, be conservative. As soon as I got this print, I'd be out. Say I got a bad fill looking at 1975, I'd have taken a little bit more than a point. If I went in with 2 contract, that's another $100. So in a matter of 15 minutes, I've got another $200. I'm now $60 away from my target. And what if I would have lost on one of those trades? Well, then I need to accept that and be patient and wait for my next trade. So here's what I'm looking at in the market now. We have a volume profile that just showed a low volume area. We got a nice finish to the upside. It failed at the low volume area. For me to accept a long now, and this could still work out as a long. So if price comes back down to 17, and I see absolute weakness at the bid and strength at the offer, it's been a trade that I've been waiting for, right? If I look at the overall market here, I don't have, on the intraday, I don't have a low volume area right there, but it's a long-term low volume area. It's also the bottom of this low volume area right here from yesterday. It's where sellers started picking up and picking through or pushing through. It's where we had rejection from here as well in the overnight and here, or yesterday. That's where it bounced off of. So the reason I'm picking this level, even though there's not a low volume area there today, is because there's enough evidence here that says my risk reward on this trade is pretty good. I might lose. In fact, when I look at the print and I see this pressure down here, I might lose in the trade if it comes down and it gets weak at the bid and strong at the offer. I don't know what's going to happen. However, what I can tell you is the risk reward potential on this trade is really good, really, really good. What's the probability that it'll work? Well, the actual probability in any trade that you get into is 50-50. If the trade works, however, and price starts moving up, the probability of this trade at least getting to 1925 and giving me profit is pretty good. If it gets through 2050 and 2075, the probability of re-engaging this closed auction up here is pretty good, and I'll be able to see that in the print. So I have means and mechanisms by which to manage this trade long back down here at 17. And if I start to see any activity back at the bid and the bid starts growing heavy, back at 1750, 17 quarter, I can simply choose to get out of the trade, put my stop at a couple of ticks. And if we get a stop run, meaning a lot of strength to the bid, a lot of strength to the bid, then all of a sudden weakness, and it pops right above 1725 with strength at the offer, I'll just jump in again because my risk reward on this trade is still a potential of 10, 11 points to the upside. So this is my scenario. My setup is this. I want to see this weakness at the bid and strength at the offer. That's one thing that you will consistently see from me, is this is one of my triggers to get into a trade. Strength at the bid, weakness at the offer at the level that I'm looking to get into. I did not get that. Therefore, it's very likely that I wouldn't have gotten into that trade. I see occasional instances where the bid goes strong, but the price is not going down. Is that buyers hitting the bid, sellers hitting the bid, sellers hitting the bid? If you see strength at the bid, but price is not going down, and here's a great example of it, this is very clearly buyers that are holding the bid. This was a boatload of limit offers, limit orders at the bid that absorbed all of the sellers' aggressive activity. This was holding the bid right here. A lot of activity, price is not moving. I hope that helps. That out-of-pocket experience feeling. I still love that phrase. If you bat 300 in baseball, you're probably in the Hall of Fame. That's a great great comment. If you bat 300 in baseball over the life of your career, you're probably in the Hall of Fame. What I would tell you is if you bat 350, 400 in trading, meaning you're right 40% of the time, and you've got the right risk reward, which means, again, you are a risk manager, you've got the right risk reward, then you're a winning trader. And getting the right risk reward is knowing where to find your targets. And that's what we're doing, right? We are learning how to find our targets. What's our next target? If this re-engages, where's our target? We're likely to hit at least 2450. If I start seeing volume growing here, we're likely to at least hit 2450. If we come through that, then the next area is looking at a potential of 2775 up through this initial right here. So I'm looking at this swing high right here, 28 level, and then I would look for 2975 to 30. And you can see the volume starting to grow here at 2250. So again, remember, my only short scenario was down through, in this case, once it started growing, down through 1725 and a short on a retest. So my if-then scenario would keep me from getting short anywhere up in this area. Because even though and you can see, here's an unfinished auction right now. See that growing? See if I can make this grow for you. Now it quickly finished. I would be looking for this high volume area up here. This becomes a problem. Remember, I talked about this low volume area right here at 23.25 from yesterday. You can see it right there. So price is reacting from 23.25. But if the auction engages and comes through that, I would say that nothing is for certain, but it's highly probable that this is going to at least tag 2450, that high volume area of the day. And then we would look at the print and see what happens at 2450. And if it starts going through there, I would expect potentially a little rotation around 2450. It's a high volume area, so I'm expecting some level of rotation, maybe sellers stepping in at 2550, 2575, somewhere up in this area, pushing back down, coming back up. I would expect to start to see a new distribution with volume growing around 2450. And as long as I've got that distribution, that acceptance higher, that starts to tell me that I'm looking for another long, and my target is now back up towards 2950 and possibly up to yesterday's high. See that low volume area right here from yesterday? 23, 23 quarter. Doesn't mean price won't go higher. Do I quit at my objective? That's a great question, Gary. I will, if I have a contract left over that I'm looking to run and I'm past my objective, I will let that contract run um, through my objective, but I won't let it take me down below my objective. But when I'm at my objective, I am looking to be done. I'm looking to be done, and I'm this is my personal training. Everybody's got to make sure they have their own as well. But what I have found is that beyond my objective, I start getting greedy, and I make my objective not just as a minimal threshold for a standard of living or whatever it may be, but I've done my analysis and know what I need to make. So my objective is my objective. I find that once I start getting past my objective, I can start getting greedy. There's a potential of making a lot more in a market, and if I see a trend, if the market is trending, and it's giving me a trend signature, I may look potentially at adding into a position or looking to extend my objective. But typically what I'm looking for is to be done at my objective, because I know that if I meet my objective most days and I manage my risk on the days that I'm not really getting the market, I'm not seeing it, it's doing something different or acting erratic, I know that overall my business, I'm going to be profitable. I'm going to be one of the 5 to 10% that make it in the business. So let's see. I'm getting our way instead of letting the market tell us what to do, to your previous fishing analogy. We can tell fish where to go. We can only reel our line and go to another spot. That's excellent. Hey, way to take that analogy even further. Right. You can't tell the fish where to go. You can only reel in your line and go to another spot. That's exactly right. And that's perfect. You understand what you can control, and you got to get yourself to the position of where you can make objective decisions about what you know you control. When you can do that, you will find your trading success consistent. It's when you feel a lack of control because you're not looking at the print, you're not understanding how to read the context in the market. When you have that lack of control, that's when you start moving your stops. That's where you start guessing at targets. That's where you start, you take a little loss and you get out of the market, and or you get aggressive, or you get revengeful in your trades, is when you don't understand what it is that you control. That's when your psychology is messed up big time. And again, one of the things I found to consistency is this method of trading, using all of these tools. And again, I'll do it over and over again. I'll give OFA props and plugs, but I have not come across a better tool to show me the auction, and that's why I use it. Biggest issue to overcome from being rewarded for doing the wrong thing. My biggest issue to overcome came from being rewarded for doing the wrong thing. Okay, why 17 a quarter? What's the magic number? Why is that? I will show you. It's a great question. See this low volume area right here? See where it is? That's why. Now remember, once price gets above that level with any kind of strength, remember all a low volume area is an unfair high and an unfair low. The day confirmed a little bit of a low volume area, but once price gets above that level with any kind of strength, this now becomes, I'm looking at it as an unfair low. And even though it dropped down below, my first expectation on a move down from this level was what? A test of VPOC. Bounced off VPOC, a bounce off VPOC, back up, what have I told you before? Puts this level at risk, right? Puts this low volume area at risk, because this is saying that sellers don't believe this is fair price. If sellers don't believe this is fair price, what are they going to do? They're going to find another area that they believe that they can make money in, because what's the basic principle? People get into trades to make money. If they don't believe that they can make money here, they're going to find another level where they believe they can make money. Where's that next level? It was here, right? Here, where we had some stop and pullback. And once it got through, where's the next level? Here. This low volume area from yesterday, which is what we had right here. Where's the next level after that? In terms of sellers, I would tell you the next level is going to be up here at 29.50, 29 quarter level. So sellers are likely to relent all the way back up to this level. And what I'll be looking for in the print is actual verification of that. So as price is moving higher, even if we start moving lower, what I'd expect to see in the print on a pullback is weakness in the buyers, some strength at the bid, weakness in the buyers, but I would expect to see all the pullbacks above this level. All the pullbacks will show weakness in buying, meaning that buyers are stepping away more so than sellers are, and they're basically doing that to liquidate inventory and take profit, more so than sellers are stepping in to push price the other direction. There's a difference. So that's why 1725, but as price came through and we looked at the print, I talked about an entry here with a stop, and then another entry right here at 1525. I think I was pretty clear about that. Would I look to go long from 2050 provided the print showed strength at the offer and the weakness at the bid? 2050, oh, right here? Yes, yes. Now just remember, we've got to finish to the auction. I would need to look and see what the print looks like. Oh yeah, with this, as this left open, this was absolutely a trade. This kind of print right here tells you the price is coming back there. At the very least, price is coming back to tag 2250. You see strength here and this kind of number at the offer. It's not done auctioning up at that point. And now we're getting weakness at the offer, strength at the bid. Again, I start looking below. I still seeing good support. Look at right here on a pullback. Remember what I told you about a pullback? We'd expect to see weakness in the offer, a little bit of weakness there. We're still seeing strength at the bid, so I would still feeling pretty good about the trade and the potential for higher, potentially higher prices. However, the print is telling me buyers, at least right now, are done at 2250. So I go back to my profile and say, well, if buyers are done at 2250, that's fine. There's 2250. Where might they re-engage? Well, they might re-engage here at 2075, possibly down to 2050, and 1975, or back in front of this low volume area at 1850. So then I start making a decision about, okay, if I got out of this trade, I'm looking for, or I got out of this trade, I'm looking for another long. What are the scenarios? What's my if-then scenario that would create another long for me? And that's right here, like you just talked about, 2050, 2075, with the print confirming, which it did right here, for another long. As soon as the print, this is done up here, the auction shows finished, so it's done up here. Again, that's all you have is this truth. Might it go higher? Yep, absolutely might go higher. Do you know if it's going to go higher? Nope, you don't know if it's going to go higher. So again, you keep taking your signals. The singles, leave in the sports vernacular there, leave some contracts to continue to run, and you manage your risk. And again, at the end of the day, your goal is to hit your objective. You do that, and you're going to be in good shape. Let's see. So that's my macro profile. Yes, the 17 quarter is on my longer term time frame. Yep. Are there sellers at 29? What I'm looking at 29, and honestly, these questions, I knew that these were going to start to come once I got into the charts. This is what happens every single time. And this is perfect because as you ask your questions and I get your questions answered, and I repeat, this is the thing that's going to start helping you transform that information into knowledge. So what I'm looking at yesterday's auction is this. See that little bump in volume right there from yesterday's auction? A little bump in volume and followed by a little bit lower volume area, 29.50. I'm looking right in front of that here at 29 quarter 29. I'm looking for a potential of sellers stepping in here at 29.25, possibly 29. So that's where I'd be I'm trying to scale out ahead of this, so that's where I'd be looking for potentially another scale if the auction re-engaged, and outside of this low volume area, if it re-engages, again, I can't guarantee this, but there's a high probability we're going to hit 24.50, and then beyond that, further up, you got to just watch out for this 27 area, but actually more like 28.50, since this was the reason I'm looking at that low volume area as opposed to this one right here. Let me expand this a little bit more. Trying to make this bigger. We got a little bit of low volume area here yesterday at 27.25 and 28.50. The reason I'm looking at 28.50 more so than this one is just because at 27.25 it didn't appear to be an unfair high or low. Price came through it pretty significantly. This level, at least initially yesterday, acted as an unfair high. So there's potential that it will do so again today. And then you can see the responsive selling up here. So we know we have, at least yesterday, we have buyers or sellers that engaged, actively initiated trade up in this area. And this was the first place that they initiated trade. So might they do it today? Yes, they might do that today. That's the first place that I would look. Second place would be this 29. Because remember, I don't know today what's going to happen in here. I'm building my if-then scenarios based on what yesterday these buyers and sellers said that they had interest in. And that's all I have to work with. And so what I look for is, here are opportunities. This is what they did. This is my most current context of buyers and sellers. So I'm using this as kind of a guide. And then I take my trades accordingly. And then I manage those trades in the print. And I let this be my most current context. And now, the other thing that we can do is take a look now on this move where volume is coming in. And we can see, if I move this back a little bit, can see certainly a little bit of trend. This would support. This is how we start using our volume clusters, right, to support our trade. All of this is supporting a move higher, a breakthrough through this level and potentially higher. What I would need to see now to negate that is a selling cluster pretty much on the other side of this with a failed auction at the offer at the top of this. Does that make sense?